Hey, Bulls and Bears. Do we have a lot to talk about? We've got a lot of news to get into. And yes, we're back with another dose of economic reality. Today's Friday, December 10th, 2021. Hope everyone had a good week. Okay, so we've got a lot to get into. Let's get right into it here. A lot of news is coming out about how this is the greatest economy in many, many years. And let's go ahead and dissect the news that they're feeding us through the main sources and what's really happening. Let's start right here. CNBC, weekly jobless claims fall to 184,000, the lowest level in more than 52 years. Wow, that's pretty awesome. The leaders that are running things right now, they must know some magic tricks that nobody else knows about to make the economy so good. Well, what happens after people are out of the labor force for 6 months, 12 months, 18 months, 2 years, so forth and so on? What happens? Well, they can no longer file new jobless claims because they haven't worked in such a long time. So we talk about this quite frequently, but we have to keep bringing it back to the forefront because every week we see these numbers and we know that the labor force participation rate has still not recovered. Even though they're telling you it recovered, JJ, they wouldn't lie to us. They can't lie to us. Really? They can't lie to us? Well, let's go ahead and bring up a chart, the labor force participation rate. And actually, let's switch it up a little bit here. Let's reverse this and look at the number of people not in the labor force. And let's go ahead and scroll in here to a 5-year chart. And since this is the number of people not in the labor force, the higher the line goes, the worse. And obviously, after the health crisis came out here, we see the big spike up here. But look, since then, have we recovered? Is this line higher than before the health crisis? You tell me, is this line higher or is this lower? To the far right. It's higher, it's not lower. There's more people not in the labor force now than before the health crisis. A lot more, not just a little bit. So the ones that are telling you that this is the greatest economy in over 50 years, again, they're looking at the official unemployment number. They won't tell you the U6 number, or better yet, the shadow stats number. They will not tell you that. All right, so that's why you're here, so I can give you the real information on the economy. But it doesn't stop there. It gets worse. Let's go back to this article. Now, imagine something like this. Let's say there was 0% unemployment. And let's say it wasn't a manipulated number or a cherry-picked number like the official number. Let's say it was actually real. Let's say everyone had a job. But there's a catch. With the 0% unemployment rate, everyone having a job, what kind of jobs are they? They're part-time, many of them without benefits, many of them with wages barely enough to rent a studio apartment in whatever city you happen to live in. So you're still going to have half the country pushing for get rid of evictions, free rent, more stimulus checks, UBI. You see what we're saying here? So are these quality jobs? Well, I think we've seen through the years here, the answer is no. All right, if most of these were quality jobs, why is the average wage about $35,000 in the U.S.? Think about that, $35,000, but yet the median home price nationally is close to $360,000. And that's if you're lucky enough to live in a lower priced area. All right, let's take a look at some recent numbers out of Las Vegas. Vegas home prices set another record, $420,000. That's from last month, November. All right, so essentially you've got home prices in many areas are about 10 times more than the incomes that these people are getting. Most people buying their homes today will not even pay off their homes before they're gone. All right, so we know these are not quality jobs. And the 900 mortgage employees, loan officers, etc., that got laid off, where are they going to go work at? Where are they going to find jobs in this economy? Will they be working in leisure, hospitality, the service sector industry. Well, most likely they will. All right, folks, we are being lied to on a massive, massive scale. But look at all the news telling us how great everything is. Jim Cramer, the Mad Money guy, the strongest economy I've ever seen. A marvel to behold. Buy, 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 buy. He's telling you to buy, buy, buy. In the meantime, he's probably selling in the background. Kind of like all the CEOs dumping stock. All of the billionaires dumping a lot of stock right now. I mean, give me a break. The strongest economy he's ever seen. What's the definition of a strong economy? Right? Everybody has part-time jobs, no benefits. The economy is the strongest for these people, the super rich. Recent article, BBC. Super rich increase their share of world's income. So not only are the super rich, even before this, they've already owned most of the world's assets. Remember, the top 10%, almost 90% of stocks are owned by the top 10%. Well, it continues to get worse. The money's continuing to flow up to the top. What's that right here? What it says here: the richest 10% of the population now takes 52% of global income, and the poorest half just 8%. And when you look at stocks, it's close to 90%. We've reported on that here a few times before. But of course, the health crisis exacerbated it, yada yada. Why is it that every time something bad happens, it always benefits the super wealthy and the mega rich? Wonder why. All right, you all know what's going on, and you're not buying the BS. All right, let's go to another chart here. This is the median home price. Now, we just reported the median home price is, for the most part, about 10 times of the typical income. But just look at the lines here and look at the steepness of this run up in home prices here to the far right. Way steeper and a much faster increase than leading up to the housing bubble. Yet people are saying there's no bubble now. Doesn't mean the home prices can't go up even higher. But when will the Fed come in and finally raise interest rates? How high will inflation have to get before the Fed comes in with their quote-unquote cure, or with their fix, and raise interest rates to fight the problem that they created, or to try to fix the problems that they created? That's what a lot of people are suspecting right now. I see a lot of you down in the comments have been saying that as soon as inflation continues, who knows where, 30%, 40%, please let me know down below what you think. What's the trigger going to be for the Fed to come in and finally raise rates to stump out this inflation? Or will they just let it ride? Is it going to be the total destruction of the dollar and the total destruction of your purchasing power? All right, that's the scary part. I don't know if anybody really knows. All right, so I'm trying to play both sides of this here. You got to have something invested in the market, otherwise you get eaten up by inflation. But if something happens to cause a correction, if the bubbles pop, you need to have something on the side, some purchasing power, and to be able to take advantage of those sales. So it's pretty scary times, folks. If this thing keeps going into hyperinflation, there's going to be a lot of people that are going to be on the wrong side of the trade. That's why you've got to be balanced, in my opinion. You've heard it before. Don't put all your eggs in one basket. Be diversified. Right? All that good investment portfolio advice that you've heard over the years. There are people that are 100% all in, 100% confident that the markets are going to go nowhere but up, that there will never be any sort of attempt to try to stop the inflation. All right, it's interesting times, folks. I'd like to hear from you down in the comments. Please let me know what you think about all this. The lowest new jobless number in over 50 years, the greatest economy ever, according to Cramer. He says, bye, bye, bye. You let me know. Until then, bye, bye. Not bye, bye, bye. Bye, bye. See ya.